Welcome to Markets Now. I'm Michelle Rook with Dwayne Bussey with Bolt Marketing. We had a down day in livestock in the equities sector while the grains were to the plus side. And Dwayne, thanks for joining us. And let's talk about the good news first of all. We did see a pop in the grains on Friday, but how much of it was just short covering or short profit taking?
I'm afraid 100% of it was profit taking from an ugly week we had. We sold off really hard, and it's nice to see the pop. But no, sadly, I think this is all short covering, just kind of a dead cat bounce off the lows. I'd love to tell you that I've got bullish reasons for this market to trend higher from here, but I really don't. What really changed for me this week is the weather. A week ago, last Thursday morning, the extended forecast looks hot and dry, right? And I left for a baseball weekend and thinking that by Sunday night, Monday, I'm going to come back and we're going to be sharply higher and I'm going to be hedging corn and soybeans. And the exact opposite happened. The weather changed and we had rains in Iowa and Illinois. And now the forecast is cool for my area in the Northern Plains and above normal precip for basically the entire nation. That ended up making us close the book on the weather market, really, any sort of rally possible there. And we took a ton of profits all week long. So when it comes to Friday, it was just a short covering bounce.
And when you look at going forward, really that market's going to have a hard time in corn and soybeans building upon it just because we have higher yield ideas coming at this market, don't we?
We do. And I'm even in the Western Corn Belt where the yields maybe aren't the best, but even I'm starting to realize like we're probably looking at trend to above type yields. I mean, I'm penciling a 183 for corn right now and 53 for beans. And I know it's on the high end, and if you're a producer that's in a troubled area like Minnesota, you think there's no way that's possible. But boy, it sounds like it's just perfect in the I states. So they're really going to pull the average up. I think FC Stone came out this week too with high numbers, pretty close to that. So it's going to be very hard for this market to rally because, like I said, what are you going to change weather-wise? And I think the trade is starting to agree with me that that's probably where yields are at. So every pop is going to be met by farmers selling too, Michelle. Remember, sadly, there's still a decent amount of old crop left out there. Maybe that was part of the selling this week, but I'm afraid any pop, you're going to have producers selling too. So, and funds will keep hammering and sell it because they sell it and they're in the right area for now.
Yeah. So we do have demand also to talk about. We did get some China business on Friday or today, about 7.5 million bushels, but China's behind in their buying, and new crop sales for exports have not been good on soybeans. So that's going to be a little bit of a headwind going forward, isn't it?
It's going to be a major headwind, especially when you factor in the fact that USDA has got us increasing demand for soybeans year over year around 250 million bushels. Now, a big part of that will be crush. And that'll be there because we built more crush plants. But on the export side of things, the other half of that, boy, right now, like you said, our pace is horrible. You could actually argue that export demand will be down next year, which who knows? That's a long ways off. So when you get like the daily sales announcements today that we got to China, I mean, a couple of boatloads, it's fine, but I don't think it helps the market much. It would have to be a huge, like 1 million metric ton type sale to really get the market excited. And honestly, even if China would step in and do that, if Brazil comes in with this monster 164 million metric ton crop next year, I mean, China could cancel ours and go right back to Brazil again. So the demand story, Michelle, really won't get traded until this winter, sadly.
Yeah. And you're right. China, there's been talk that they're going to come in and buy more beans for their reserve because they like U.S. beans. They store better, but it's got to be a big amount here to move the needle, right?
It really is. And I think it was either you or Jim yesterday as we were talking in AgriTalk PM that, the interest rate changes things too. If China is going to buy commodities and store them, that costs money to do that now. I didn't think of that, but that's a very good point too. So, and right now, if you're China, if you do nothing every day, the price seems to go lower and you're going to buy it next week on sale anyway. So I think they're just waiting.
Corn demand has been better than soybean demand from an export picture. We had a record high week for ethanol production. But again, it's just not enough to chew through these big ending stocks that we have, right?
Not with the forecast the way it is. I'm one that even with my higher yield of like a 183, I'm going to lower the harvested acres down about 400,000. I hope that's the way it is as a producer myself. And then my ending stock still stays around 2.16 billion. So it's not really that bad. But to your point, even with very high demand or better demand, you're not going to run out of corn anytime soon next year. And we still got old crop, like I said, for farmers last year out there. So you can throw a lot of demand at this, and it's just not going to really matter until January, maybe.
Gotcha. Wheat market did close higher on Friday. As we mentioned, some of that was probably short covering, but the dollar got slammed pretty hard on Friday as well as part of kind of this, general outside market reallocation of money. So do you think that was part of what wheat was trading on Friday?
Yeah, I think so. Definitely the dollar being sharply lower always helps a wheat market first. It's funny, I've been so doom and gloom on everything this week, grain, corn and soybeans down so hard, now cattle crashing. I had almost slipped through and I didn't realize that wheat actually had a decent week and closed higher for the week. So good for wheat. Now remember, winter wheat harvest is nearly complete, spring wheat harvest getting underway. Wheat should be the first grain that finds a bottom here. And I think our export demand moving forward is going to be pretty good. The story isn't really out there anymore, but the Russia wheat crop is quite a bit smaller year over year. Ukraine is quite a bit smaller. Maybe Australia is just a touch bigger, but I think we're going to be competitive the next year as far as global wheat exports.
So you got just a little bit ahead of me there, Dwayne, because I was going to say we had lower weekly closes for corn and soybeans. No surprise. I was surprised we were a little higher in the weekly close on the wheat market. I guess the key is, or the question is the low in that market, do you think?
Boy, the way I feel today, it's hard for me to predict a low in any market, but seasonally, it would make sense for wheat to find a low here. And, the supply is very well known. So it wouldn't surprise me if wheat is at a low. The problem with calling a low here is it doesn't trade in a bubble by itself.
Right.
For example, soybeans, I'm still fairly bearish on right now. That I think there's still some weather premium built in there. And we talked about the poor demand issues. So if November soybeans could at worst trade another dollar lower, get around the 920 area, which is very possible, then it's going to pull wheat down as well a little bit. But wheat by itself in a bubble, I would say, is at a low.
Okay, I'm going to be pulling the pony out of the poop pile here and just say we did at least get December corn closing back above $4 today. We're still above 10 on November beans, so we'll take that home for this week. Cattle market, we did have a lower day there, lower weekly close, but Friday it was all about the stock market. We really saw that risk off selling as a result in cattle, didn't we?
Absolutely. I think for 2 days, that's what you saw in the live cattle market.
Oh, sure.
The stock market was down really hard Thursday and Friday, and I think the cattle market just followed suit. Now, live cattle, we've got such a discount to the cash market, and August is going to go into delivery Monday night. I think that contract should find some support fairly soon, as long as nothing crazy happens over the weekend, and I don't look for that to happen. So I think the live cattle market can rebound a little bit. Now, with the stock market performing the way it is, and I will say I think feeders look toppy before this week. They really struggled with that 260 area. It felt like it was running out of steam. And if you're a fund trader and you're long, we were struggling with 260 anyway. Now you got this negative outside market news. I think it was really easy for them to just hammer the sell button and say, get me out. I don't care how much it's down today. Just get me out. And I got some bad news. If you look at a continuous feeder chart, this market could fall a long ways yet and still be in an upward trend. So I'm a little worried funds are probably going to look at the poor technical picture in cattle and maybe still sell the feeder board. Live, the nearby could be a little bit of pop on Monday and Tuesday, but I feel like the highs are in, Michelle.
October live cattle, though, at least managed to close back above the 100-day moving average on Friday after taking it out during the session. So can we call that a victory or not?
Oh, yeah, absolutely. No, I think today's trade was overdone. I think we should bounce back. I just, with everything else we're seeing here this week and hearing, I think we've seen the highs in cattle.
And did hogs just follow cattle? Was this recession fears here as well? The cutouts were up today.
Yeah, and that doesn't surprise me. And actually, the cutout being sharply higher today maybe proves that maybe we are in a little bit of an economic slowdown. We've seen this happen where cutouts are lowering a little bit for beef and going higher for pork. Probably is just that transition away from the higher cuts of meat and going to the cheaper protein. So good on hogs.
Okay, thanks for joining us as always. Dwayne Bussey with Bolt Marketing, and that is Markets Now.